name is Victoria, and welcome to Money's Talk, the podcast powered by Money's Magazine and Invest Capital. Today, I have incredible guests. It took us quite a while to sit down and talk. So, hi, Florian, how are you doing?
Well, thank you, and sorry for having made the trouble, but finally we make it, and I'm really looking forward to our conversation.
No trouble at all. I have lots of questions that I won't be even able to ask you everything I want to ask today, but at least a couple of main questions I'm planning to ask. But before we start that part, could you please introduce yourself and tell us a couple of words about you?
Yes, so my name is Florian. I'm based in Geneva. My background is originally business administration and international marketing, and after a longer career of many years in the corporate side, I then changed and moved over to the more entrepreneurial pathway
Mhm.
and supporting a lot of companies over many years. And then about 10 years ago, I entered the space of impact investing. And this is giving me a very different meaning to my professional life. And as such, right now, I am a managing partner of a company called KOIS, KOIS. And we basically design, structure, and implement impact investing, financial vehicles. Could be impact bonds, impact funds, blended finance, but also results-based finance. And we do that for international organizations, corporations, and investors. A lot in healthcare, education, livelihood, and climate, with all its angle. And separately, also, I sit on some board of some companies as a non-executive director. I'm supporting also some other meaningful organizations, and also I'm also co-founder of a startup called Resilientia, which is focused on the livelihood of the people living at the shore, at the coast.
Wow.
Yeah, so those are the things. But my main part is really the focus I have is being responsible for the advisory business at KOIS, where my team members sit in Brussels, in Paris, in Mumbai, and Nairobi today.
That's a lot of responsibility, I must say. But I know that you have your own techniques how to deal with this, which I'm going to ask you. I'm going to ask all your secrets a little bit later. But coming back to the beginning, what was the turning point that led you to focus on impact investments?
A great question. This goes back many years ago. In my corporate life, when you are in an executive level in a big corporation, and I was that in healthcare, as part of that, to think about how to give back, how to support also this corporate social responsibility. And so I had the pleasure to set up a non-for-profit medical education foundation in Mexico. And there we were supporting patient associations, also different programs, including donating material, instruments, and different products like IV solution and these things for the treatment of patients. And at that time also we had supported an extramural surgery program, basically, which is an OR mounted on a truck going into the remote areas, and that including also the jungles to operate the vulnerable population.
Mhm.
And I thought it was great, and I felt really good about it. And I remember also that they're operating on patients on, and I remembered also a little child with a cliff lip being operated on. And I feel really great thinking about, not only aesthetically, but from breathing and speaking, all of that would be improved. And I felt great. And so we took a picture of even that to put this on the newsletter. And then later on, I learned that the child had died. And it struck me. Number one, I thought just going there, helping and leaving is actually not changing lives. And actually then also helping others. Nobody wants to be really helped. Yeah, and I learned this also years later in my professional life, an impact investor. Yeah, that people have been talking a lot about poverty uplift, but nobody wants to be uplifted. But that is when my more entrepreneurial pathway later on. I supported companies, also in the fundraising a lot, transactions a lot, growth stages of companies. When I moved to Switzerland, I learned about impact investing, meeting the founder of an asset management platform called Bamboo Capital. And I thought this was amazing. If you use capital as a force for good, you're actually not helping, you are on the same level investing. Yeah. And you just try to do this in more difficult environment, in more riskier stages, and try to find solutions around that. So for me, my aha moment was threefold. Number one was I discovered my passion beyond my private life, and also maybe on the healthcare side, wanting to help people, but really not really helping people, but more to co-invest, to support them, and to look at economic empowerment. Second one was that there are solutions and tools where it makes actually possible to invest in these areas if you adjust the risk reward return and make many mechanisms to it. And the third one was for me a personal reflection. Yeah, that if I'm focused on myself, being the one to help and feeling great because I'm, want to do something good for someone else, I'm actually not necessarily putting myself in the shoes or, on the chair of that person. Yeah, so helping is not necessarily the right word unless you asked for, but it's really it leads me to my personal leitmotif, which is called impact lives and share profits.
Thank you, Florian. It's a really very moving story. I had my moments many years ago in a tiny fisherman village in Madagascar when I met, I think, 12 years old girl who she heard us speak in French and English, and she was saying, "Oh, I want to learn French and go to Antananarivo, to the big city, to university, and study medicine and become a doctor, so I can come back and help my village because conditions that they live there, you can imagine." And I was looking around and realizing that the chance that this will happen is so tiny, and the issue is so much broader than just pay for one kid's education. We need to tackle actually the core problem. So I can relate to this very much, and then I think that what you're doing, blending both worlds, is very important to tackle the core problem. That's also a very emotional topic.
But on this side, just to build on this, because when you talk about fisherman village, I use a common phrase, but I've redirected it. Yeah, so the phrase I use is saying, don't give a person a fish, don't teach a person how to fish. Better invest in its fishing business.
Yeah.
Because that's when you impact lives and share profits.
Absolutely agree. Yes. Yeah, I mean, okay, I always thought that gives the tools or educate how to do, but I like your approach that goes one step further even. So talking about your approach, yeah, I have to turn from this emotional topic. Talking about actually your approach and your current role in COIS. You mentioned already that you work a lot with public and private institutions, you develop bonds. So could you tell us a little bit more what you're actually doing there, and how is it to be the managing partner of an impact investment firm?
Yes, so maybe just to state, the previous many years I've been on the asset management side, investing. So you raise funds and then you invest them. And when I last year joined Kois, it was actually to focus on the advisory side, which I had done also previously at Palladium, another company on the capital advisory side. And so at Kois, we have an asset management part. So the founders, Francois and Charles, have started with originally the advisory, then started to raise fund, then it's become an asset management business. And then there's a moment where they couldn't focus on the advisory anymore. Yeah. And so this is where they looked for someone for me to join as managing partner to focus on the business. Now, the beauty of this business is if you imagine you are between two worlds, you are between the aid and development world and the for-profit world.
Yes.
And usually when you are in this space, the aid world, the philanthropy world looks at you saying, you say you are social, but you're not really. You're kind of a disguised shark. Yeah, because at the end, it's all around the financial profit. And then you have people in the financial world looking at us saying, you say you do financial returns, but when you do good, you're not really. Yeah. So you're more a tree hugger. Yeah. You're not really about the real financial. And I think both of these judgments come from a fundamental flaw of people believing either I make money or first I make money and then I do good. I cannot do both. Or if I want to do good, I will earn less money or maybe no money. This is just not true. Because the space we are in, we try to adjust the risk of an investment and the return of an investment. And the return has a financial return and an impact return. Because we are looking at the intentionality of the capital, but also the additionality of the capital. So we try to make money flow and invest in areas where normally it would not invest because the risk is just too high. And the risk can be from a geography, risk can be on a stage of a company. Yeah, the risk can be a risk exposure, depending on where you invest. So the intention with impact investment is to address the intentionality. So you have a theory of change you invest in. What do you want to resolve the capital should resolve for? And then the additionality, where you say, this is an area where money normally wouldn't flow. How can I construct things so that the money can flow? And this is what we do at Kois Advisory. Yeah, we look at how to build financial vehicles to invest or to provide loans, or invest equity. Because the asset classes are more or less the same, but just the focus and the theory of change is being added. And the work is really meaningful. So many years back, for example, with Kois, we did the first humanitarian bond. That you would, in a humanitarian crisis area, in a very fragile setting, be able to provide loans, provide money, and that money came actually back. This was done with, for example, the International Red Cross. We also currently have, for example, development impact bonds, which are financing refugees, Syrian refugees, in refugee camps in Lebanon. So small pieces, financing, the money comes back. Yeah, and the returns are really, we're doing some of the reports actually recently now also publicly, because you can see in an environment where normally nobody would invest, and everybody thinks, crisis, we need to put money, we need to help the people. Yeah, there is a possibility where you can actually provide financial tools for the population. So those are the things where you go in a very, then you have also sometimes results-based finance, which is not for profit necessarily, but you take a very high risk. You finance something based on a result, yeah, setting up a company, scaling a company, supporting a project. And based on that one, you would then invest. Now, then the next step would be when you go a little bit more towards financial mainstream markets, is when you do blended finance. They use non-for-profit capital protecting for-profit capital. And as the for-profit capital is protected below, the risk reward, the risk is lower. And therefore, the return can be lower. And that permits to invest on theory of change in different parts. And we have my previous life business wide, we've done several of those vehicles. Yeah. And they're usually public-private partnerships also a lot. We did with the UN. We had some mandates from the World Bank. But really, when you're trying to address this problem on the additionality, how you can invest, let's say, in smallholder farmers in sub-Saharan Africa, yeah, when normally a bank wouldn't invest, even local bank, because the risk is too high.
Yes.
Yeah, that's where you try to adjust it. And then you can go further, and again, you can go closer and closer, but the less there is a risk, the easier it is to invest for private investors in a normal way. And therefore, then the question is usually also the additionality is less. Yeah? The intentionality is still there, but the additionality is not. So that's the world we are in, and where we collaborate with many different organizations throughout the world in trying to establish financial solutions to address the risk, reward, return of investments.
That's very interesting. And yeah, so that's actually what you were mentioning. It's in the finance world, people want return, and returns for finance people. This is the first point to consider. So, how do you define your returns? Like, I mean, because this is not a traditional way. You were just saying that yes, to target that specific area where is a low risk and low but stable return. But still, I think for some classic old school investors, even this sometimes not really the attractive part. So how do you define your returns and how you measure your returns?
So, two different returns, as I said before. The financial returns are measured as any other financial return. Yeah. And it's against a goal. When you lend money, you have an interest. Yeah. Or when you provide debt, you might have a yield. Or if you invest equity, you're looking at an internal rate of return. So that is standard. So that any investor understands, I invest my money, that's the risk, and those are the returns, and this is how that is measured. There's no difference.
And what about impactful return?
Yes, therefore we measure in parallel the theory of change, what has happened on the ground in terms of output and outcome. Yeah, for example, when we're talking about energy access, how many households or people have access, or businesses have access to energy now, which didn't have before, or access to clean energy. The different, you can go it also in the financial side. Financial inclusion, of course, is very well known since over 20 something years, microfinance and the blessings of that. But also you can go into healthcare access, you can go towards education, access to, for education. And again, technology, by the way, helps a lot. But this is where we measure the impact. And that is something which is not easy. Yeah, because, and if you take money, for example, if you get money from impact investors, they will ask for the impact returns and want to make sure that there is no impact washing or greenwashing, but it's actually transformative. What's the real impact on the ground. And the
Mhm.
more concessionary money comes from the government, for example, or from DFIs or from foundations, the more they are keen to avoid emission drift. So in a financial world, we would say the use of proceeds. Yeah, what will my money be used for? Yes, I know my financial return. Yeah, but what will it be used for? What's the theory of change? Yeah. And so there's a connotation which is providing actually additional value to return because it doesn't mean a return for the sake of return. You know, it means a return which you target, but specifically you want something to resolve for, which is very exciting. You know, once people invest in this area, usually it's contagious. Yeah. And they like it because once you see that you've invested something and you've made money, but also what has happened on the ground.
Yes.
Yeah. So this is when you impact lives and share profits.
That's really beautiful. And so, do you see the tendency or on the side of private investors and let's say traditional investors? Do you see the tendency towards impact investment growing, changing, or it's still as hard to convince them as 5, 10 years ago?
Oh, it depends on the track record.
Mm.
You know, I mean, of course, we have invested, right now it's about $700 million of, assets under management today, and the returns are standard returns, really great financial returns.
Mhm.
So the fundraise is not be done specifically on impact. There is impact, but it's really commercial also on the side on the asset management. But again, as any other fundraise, it goes back to the perceived value. And if the perceived value is high, it's actually easier to fundraise. Sometimes to get concessionary money, or catalytic capital is actually easier than a pure for profit. Yeah.
Yeah.
So, but the reality is also, I mean, unfortunately, in today's world, yeah, is that especially in the US, the, the term impact has been politicized, but you shouldn't. Yeah. Again, you want investing, you're not here to help. Yeah. And
Mhm.
you want to resolve for. But on the other side, also from generations now, Gen Z and beyond, um, care for causes. It's not just a financial return. Yeah. And people start to ask themselves, what is my contribution to the world other than having had a family and a bank account?
Yes.
Yeah. And those are the pieces where if someone is looking for, some people are interested want to focus on legacies, that's something. I think generally we all want to make a difference in the world, yeah, in one or the other way. But if you can really solve for something, yeah, whether you're investing in nature or in energy, yeah, or in economic empowerment, yeah, or gender lens investing, for example, is also a big topic.
Mhm.
All of that is where younger people have an affinity to. Whether you buy a product or spend your money, at the end, it's an emotional decision. I mean, there are some basic things of the Maslow's pyramid, yeah, but again, beyond that, yeah, and then the perception is also, if you pay more for a brand you like, yeah, which is an emotional decision,
Yes.
yeah, it's not the real substance you have at the end. So the higher the perceived value is, the better it is, the more you will want to pay, or the faster or the happier will be. And this is where I believe that knowing what the use of proceeds are and what beyond the financial return actually you are solving for has a lot of meaning, especially to young people.
True. True. I think there is a tendency for second generation not to just blow everything in 1 year on shopping and parties, but actually to do more conscious investments and actually to give back, but to give back in a smart way, in this long-term perspective. And I find it really very hopeful for our world.
Yes, but again, even the word giving back,
That's
a
not
lot of
really.
the giving, because a lot of giving back has this connotation, I feel guilty.
Yes.
I'm very successful. I made a lot of money. Now I need to give back. Yeah. This is not necessarily, I think, where we should start from, because this is still meaning either I make money or first I make money and then I give back. It is really to think about as, it's something maybe that's also a book I've been working on right now and hopefully will be released later this year, is really around if you are able to dedicate yourself to your purpose, your vocation, yeah,
Mm-hmm.
directly as a job, then the job is not a heavy job. It's actually, it's a very, very different motivation you have by what you're trying to solve for. And if this is your job, and that goes really in all directions. So you can look at any company. If the core values are around stakeholder value, the net promoter score increases.
Yes.
If you're focusing on the shareholder value, at the end, it is usually then more a monetary result people focus on. And also your, team members might be there because they get a bigger paycheck. Yeah. And it's very different if you have the luxury of, first of all, understanding what your passion and your vocation actually is, and then to figure out how you can dedicate your life to it, so make it yeah. So then the meaning changes. And that's something where I see that a lot with younger people, yeah, that they go inside and want to understand. Yeah. And this is where I'm saying this is not necessarily about giving back, but this is about the contribution my work can give
Yes,
to the
I do
world.
agree that that's not really the right definition, and I think that's what is a good tendency that young people actually more open to go out there and try different things and try non-conventional things. I find this very interesting and positive. But coming back to you, I mean, I have so many questions that have opened up in my head now. Every time you say one sentence, but I try to still keep it in our time frame. Um, at the beginning, I was saying that I know that you have a certain approach and certain secrets how to manage your team and your time. And personal development strategies play quite a big role in this, especially in a building high performance teams. And you already said that. So it's a five countries. I think you have teams in 5 locations, if I counted correctly. So could you share a little bit about that and like how does it look in practice actually?
Yes. So it's a great question. And maybe it all started or stems from that I recognized, I figured out at the age of 30 something, I had all achieved what I wanted. Yeah, I was leading a business, I had my house, I had a good financial situation, family, everything was
Mm-hmm.
okay. And I was not clear why I wasn't happy, why something was missing, something deeper with a deeper meaning. And that's when I figured out also that we, I am the absent person of my own education. From primary school up to university, I learn about everything I want to when I can, except myself. I don't know how I function emotionally, how I function instinctively, how I function mentally. I don't know. So my life is defined by external things happening around. Yeah. And that basically means that there is not, let's say, it whoever I'm with, or whatever stimulus external I get makes me respond something, and my path is empirical.
Mm-hmm.
And if I'm lucky born, it's easier, yeah, than being born in a subset which is underprivileged. So then the question was, okay, now how can I actually learn about myself? So I had this quest for myself where I digged into different personal development methodologies. It's also part of the book, gives in that journey. And the piece is really that I started to look into different methodologies. You could, but it's Jung Colors,
Mm-hmm.
Myers-Briggs, MBTI, neurolinguistic programming, Enneagram, human design. I really try to learn more about myself with the quest of finding myself. And that's the piece where I figured out, once I learned about some of the methodologies, I actually applied them in my professional life with my teams. With great results, egos going down, understanding my place, also where I'm strong at, naturally, would I fit? And not as a challenge, but really something I can really excel. I learned that heterogeneous teams are much better in performance than homogeneous teams.
Mm-hmm.
I learned that
That's interesting.
extroverted people will take the space, but you have to pull out the introverted people also to be participating in, because that's where you can, it's a lot of value in there.
Mm-hmm.
And this is also now, I'm pretty new at Kois with the advisory team with really amazing people. But also we start from the heart. This is also what I appreciate very much about Charles and Francois. The origins of what they do and why they do this comes from a deeper meaning. Yeah, so this is beautiful. And that increases the perceived value, the net promoter score, and the people and the meaning also what we're doing. And so I want to say that my own learning by trying to find something out which didn't exist in my normal education. Yeah. And I didn't want just have it empirical. Help, was that there are really great methodologies out there where I can learn about myself and about all the people surrounding me. And if I take this into my professional life, it's really transformational, and it's a very different meaning of how to collaborate and how to build teams. And the intrinsic motivation of the team goes much higher naturally, on the performance side, which at the end benefits the profit of the company.
That's really interesting. I know someone who does it based on zodiac signs,
Mm-hmm.
and sometimes it looks quite impressive because it's a huge company, one of the biggest in the country. Around 40,000 employees, and the core team, like the management teams in the management, they're all. Not grouped is not the right word, but what is your zodiac sign? It's actually one of the first questions you're asked in job interview. So, and it works. So I think as long as it works, it's amazing. So how does it work? Like on practice, you encourage employees to do different tasks, implying different methodologies. I love human design. So you group them on like who is a projector, who is a creative part.
Yeah, but that's the point. First is your discovery of yourself.
Mm-hmm.
And therefore, you use the same methodology. It's not that one methodology is better than the other, or only one is the one, to go for. It's just if you have a common language, like in science, that you basically find that. And then when you train people on that, then they find themselves. And once they find themselves, then the dialogue comes within the team. And it's a rich one. Yeah, because you go more vulnerable. Yeah,
Yes.
because you understand the force of vulnerability. Yeah, you have a common language and a code of how you communicate. One, I'm a big fan actually also of the four agreements,
Hmm.
which are from ancient wisdom from Central America. Yeah,
Yes.
the
I'm not
pre-colonial one.
familiar with it.
Yeah, I recommend you to look them up. The Four Agreements, they're called. There's an amazing book, and it's just these. And actually, I've been using that in the office also, that we put in the meeting rooms, the Four Agreements, just to remind us
Hmm.
on the impeccability of language, not to assume, yeah, to always give the best. Yeah, it's something so obvious, but sometimes when you are in the meetings and you might have some jokes about someone else and not meant that, but yeah, and you harm the environment with this. Yeah, or when you have an assumption rather than just first listening, trying to understand what you want to say. Yeah, and even writing is even worse. Very often you get an email and you read an email and you explode, and then the next day you read it again. So, oh, probably I've misunderstood. Yeah, and this is the part where you know humanity has a lot of um, complexity, but also a great beauty. But the point is, so the intention for me was rather to understand things and use the methodology, and then to build on that, which was really amazing. Maybe a little bit also with my father was a psychiatrist and did psychoanalysis, and when you talk about certain things which go into the more metaphysical areas, he would have refusing that, saying this is not science. Yeah, this is some voodoo stuff. Yeah, but with age also, then he opened up doors and he understood, that there are components to it, and probably all all of the any of the great physicists out there with big discoveries at its time were marked as someone, you know,
Hmm.
crazy. Yeah.
Yes, definitely.
Until science was catching up and then could prove things, whether you go into quantum physics or many other things. So therefore I try to do things based on a reason and a science, not just pure inspiration and pure intuition. Yeah. Just because also, our nature, humans, we are fragile. Yeah. Life is fragile. Yeah.
Yeah,
And therefore you try to protect yourself. Yeah. And the biggest protector is ego. Yeah. Which you nourish and nourish because you want to protect yourself at the end.
of
And
course.
that's the part to recognize your own ego, to temper your ego. You cannot get rid of it, but you temper it. Yeah. And when ego goes down, empathy goes up. Yeah. And then productivity also goes up. That's my experience over the years in teams.
That's a very good idea. Like that's a good point. Uh, yeah. Hmm. A lot to think about. So you said that your book is going to be released this year.
Mhm.
Okay, then
Yes,
we should definitely meet one more time to discuss after your book is released, please.
with pleasure. Yes, we're working with a um, publishing house right now on it to finalize and then release.
Perfect. That's amazing. Unfortunately, our time is running to the end. I think I got more questions than answers, but thank you very much for your answers. It was really very interesting and very insightful and deep. Thank you for being so open to share your thoughts and your opinion. The last question that I would like to ask you actually is, what advice would you give to our audience? Or like what would you share? What would you, yeah, one piece of advice for those who are gonna watch us.
Yes, maybe three pieces. Number one is, yeah, don't try to nourish your ego by wanting to help others. Rather put yourself on the same level of the other person and then try to invest yourself. Second component is dare to dedicate yourself to your passions, something you really want to resolve for. because it's very rewarding. It's not easy, but it's rewarding. Yeah. And the third one is that investing or supporting underprivileged people directly has the great benefit that you're tapping into underserved markets, and they're really transformational. Yeah. So therefore, I would encourage. Yeah, you might have some low-hanging fruit saying, I might see something in this market or that. It's very easy. It's en vogue, and everybody goes in AI and other things. But there's a connotation of it, AI for good. There's a connotation also of access and affordability, transformational approaches. And this is where I would encourage people to look at, because it's really fascinating to understand. When you're in a field where you have less incumbents, yeah, and where with less money, financial gains can be done also significantly. So that's the part. The third one is more from an opportunistic point of view, the lens of an investor, the focus.
Thank you very much, Florian. I think that that's a perfect goodbye message. And yeah, so good luck with the book, and I am waiting for our next conversation. Thank you.
Anytime, looking forward to and happy to engage a little later this year. Thank you for having me here. Really appreciate it. Very grateful.
Thank you, Florian, for joining us.